Okay, so we will continue our discussion on chapter 14. Chapter 14 is the start of the next unit. We are now into corporate accounting. So corporations have a bit of some different rules and regulations and some different journal entries as far as accounting is concerned. So let's briefly talk about what's coming in this unit. So in this unit we're going to talk about a lot of things. You can see this slide details some of the key words that we're going to be focusing on in the next couple of chapters. So corporations, shareholders, organization costs, organization documents, share capital, common shares, preferred shares, and the list goes on and on. So you can read the list on your own, and let's start covering these terms in our discussion. Corporation. What is a corporation? Corporation is a legal entity separate from the owners of the company. So when you have a sole proprietorship, when you have a partnership, you are the business. But in a corporation, it is a completely separate entity. It is a third-party entity that is created by the shareholders, and hence it has a separate legal status in the eyes of the government. As you can see from the slide, that about 90% of all businesses are corporations. You may think of corporations as large, big businesses such as the Bay, Walmart, McDonald's, Nike. However, if you start listing all these large, big corporations, they will probably end up at 2,000, maybe 2,500, and that's it. The rest of the companies, rest of the businesses are smaller businesses. So what happens is you've got large businesses and you also have small businesses, but most of them are organized as corporations. A corporation's purpose may be to earn profit, or it may not be. It may be non-profit organizations or not-for-profit organizations, which are the same in essence. So they are also corporations, but their purposes are different. They can be cultural clubs, they can be athletic clubs, and so on. So let's move to the next slide, which talks about focuses on the two types of profit-making corporations. So as I alluded to earlier, that there are public corporations and then there are private corporations. So public corporations make up about 8% of the total corporations in the world, and private corporations are about 92% of those corporations. And they are small corporations, they're privately owned. When I say private, it doesn't mean that they do businesses privately. It just means that businesses are out there, but they are privately owned. So it can be a family corporation, it can be between 5-6 friends, it can be a partnership between spouses, and so on. One of the definitions of a private corporation in Canada is that it has to have less than 50 shareholders. So 50 or less shareholders. And that would make it a private corporation. And a second stipulation for that would be that it cannot be traded on any stock exchange. Once you are that big that you're trading on a stock exchange, you are a public corporation. So there are certain costs that are incurred in forming this corporation, because it just doesn't happen all of a sudden. And they are called organization costs.
The public corporations are the only ones on the stock market?
That's right. So only public corporations are traded on the stock market. The rest, which are private corporations, are not traded on any stock market because they're not publicly owned. They're all privately owned. Organization costs include such costs as legal fees, incorporation fees, initial accounting fees, some of the marketing fees or underwriter fees. So they're all considered incorporation costs. Yes, it can be argued that these are actually not expenses. They're an asset because they help you do business for the rest of the company's life. However, under GAAP and under different statutes, it is allowed for you to take out all of these costs as an expense. because they realize that these are not going to be material in any way or form, and also that a lot of people, a lot of shareholders, a lot of private company owners would like to write off these expenses. So you would definitely debit incorporation costs as an expense and credit cash, and this would mean that you have now started a company. So this is the first transaction of a company. When a company is formed, this is the first accounting transaction that happens. You always put money into the company to start a company, and that you are debiting as incorporation costs. What do these documents actually cover? What does this package include? I feel that these are the four most important documents for a corporation, because they are the ones that guide you in how you do business for the rest of the corporation's life. So these documents include articles of incorporation. Articles of incorporation are 5-6 pages worth long, and they actually explain what kind of business you're going to be. So if you're going to be an accounting firm, they tell you in those articles that this business is restricted to an accounting firm. If you're going to be a pharmacy, it tells you that this business will be a pharmacy and providing services in this area for pharmaceutical services. So things of that nature. For articles of incorporation are for the people who own the corporation. Then there is this document that requires you to have information on the directors and executives. So who's going to be the president? Who's going to be the vice president? Who's going to run the business, and who's going to be a silent partner, if you wish to call it that. So all of that information has to be submitted to government. Number 3, a business plan. Business plan is really, really critical for your success. It is not a required document as far as the government is concerned, but for you to succeed in a business, you need to have a plan. How you forecast your revenues and expenses, your assets and liabilities, where do you want to grow, how does that all work? This is part of a business plan. Then you need a license to have your business. So the articles of incorporation give you certain eligibility to get a license, and then you apply for a license if need be for certain businesses. For example, a pharmacy would definitely require a license, because only a licensed pharmacist can own a pharmacy. So those are some of the documents that are required as far as organization documents are concerned. So as I mentioned earlier, what you would do is you would debit incorporation costs, and you would credit cash as far as this expense is concerned. There is one more document that is included in organization documents, and that is called bylaws for your corporation. So each corporation must have should have a set of bylaws, and they basically dictate how and when certain things will happen. What happens if the corporation is owned by one person, and that is the only person that owns the corporation, and all of a sudden he or she dies? So what happens to the corporation? So those are the kind of things that the bylaws will dictate and explain, the next person would have to execute certain things. Excuse me. So bylaws are a definite component of the organization documents up front. So moving on, what are some of the why would anyone take this pain and these costs to incorporate a business? Because it does take a couple of $1,000s to incorporate this business. So there are definitely lots of advantages. Some of these advantages are listed on this next slide. For example, separate legal existence. So now you have this completely separate business, separate from you as the shareholder. It is a big advantage because you can pass the business down to the next generation if you wish. You can sell the business if you wish. It's kind of hard to sell yourself because you are the sole proprietor if you are it. So you can sell your corporation, or you can pass it down. It doesn't die when you die. Limited liability of shareholders. So if someone files a lawsuit against a corporation, there is a limited liability. They can only sue the corporation and not you personally. So what happens is the limited liability saves a lot of people a lot of headache. In a sole proprietorship or a partnership, you would be sued yourself. So if someone sues you, then they will sue you, and that means your assets and so on. But in a corporation, it is limited to only the amount that you have put into the corporation. Continuous life, that's the same thing as, not the same thing, but it's the next step to separate legal existence. You can pass it down to the next generation. Professional management. So corporations tend to have professional managers, and you would be more inclined to hire other people other than just you or the family. And ability to acquire capital, a corporation can itself borrow money. If it needs money, it can go to the bank, file the documents, the required documents, and borrow money. And one of the biggest advantages is that it has reduced income taxes for private corporations. So for private corporations in Ontario, the corporate tax rate is 15.5%, which is extremely low when compared to some of the other income tax rates for individuals. As an example, some individuals have to pay 47% in income tax if you're earning a high amount of money. And in this case, private corporations would only pay 15.5%, which is much less than 47%. Some of the disadvantages for corporations are the fact that you must have ownership which is separated from management. Yes, it can be the same person. You can be a shareholder and you can be the president. However, you are playing two different roles. So you can also have separate owners that come in. So that would mean that there will be different costs involved. Increased expenses for a corporation, of course, because it's a third-party company now, you've got to manage it as if it's a separate business other than you. Complexity of some government regulations, and potentially higher income taxes, but only for public corporations. For public corporations in Ontario, the corporation tax rate is about 40%, so which is higher, much higher than the private corporations. So those are some of the disadvantages. So we've talked a lot about the corporate form of business today. I've introduced you to some of the advantages and disadvantages, and we've also talked about the first journal entry that would happen in a corporation once you form a business. So we'll continue from here from tomorrow onwards. Thank you.